Coming up on Business Incorporated. Ethiopia suspended from AGOA over human rights abuses. And South Africa secures funding for low-carbon economy transition. And Ghana set to boost revenue with digitized tax system. Hello and welcome to the program. I'm Ladi Williams. First off, the markets here on the African continent, it's a mixed sentiment at intraday as the South Africa's GSC index rose by 0.82%, followed by the all-share index of the NGX, which inched up 0.03%. In contrast, negative sentiment was recorded at intraday from Egypt. The EGX 30 was down by a moderate 0.29%, while Kenya closed Tuesday's trading session in the red, down 0.68%. Meanwhile, in the Gulf region, it was also mixed sentiment at intraday. In the UAE, Dubai financial market recorded significant gain as it soared by 3.18%, while Abu Dhabi was in red, down by 0.13%. Elsewhere in Saudi Arabia, the index fell by 0.65%, while the Qatari market was up 0.50%. All right, let's cross to Frankfurt now. Let's take a look at what's happening in Europe with Chelsea Delaney and in Frankfurt. Great to have you, Chelsea. Well, the big focus of markets today is the U.S. Federal Reserve meeting later on today. What are the investors in Frankfurt expecting?
It is indeed finally Fed Day. This has been one of the most hotly anticipated central bank meetings that we've seen really in months, because the Fed is likely to announce that they're going to start tapering those bond purchases that they've been doing that have been helping keep interest rates low. So this is really the first step in paring back some of the pandemic stimulus. Right now, the Fed is facing an economic situation that we're seeing all across the developed world. Inflation is very, very high, at a 30-year high in the U.S., and we're still waiting to see other parts of the economy, like the job market, recover to pre-pandemic levels. So they want to deal with the inflationary pressures we're seeing without cutting off support to other parts of the economy that still need it. So while they are expected to announce this tapering today, they're also expected to indicate that they still are there to provide stimulus to markets. So a lot of investors have been betting that actually the Fed will start to raise interest rates next year, which is a much steeper pullback of pandemic stimulus. But we could definitely see Jerome Powell, the Fed chair, sort of try and tamp down those expectations. But right now, investors really aren't sure what to expect. As we can see here in Frankfurt, the DAX is completely flat at about midday.
Right, I see it's flat there. Well, we'll continue tracking that meeting when it starts. But we've also seen a flood of new corporate earning reports today. Let's start with Germany's Lufthansa, which reported a surprise profit for the third quarter. Walk us through these results.
Yeah, it's been quite a turnaround for Lufthansa. They were hit so hard by the pandemic in the early days. They had to get a bailout from the German government just to stay afloat and avoid bankruptcy. But in this quarter, the third quarter, they actually returned to a profit for the first time in the pandemic. That was a surprise for investors and analysts, and we have seen the stock really rally on that news, up about 5% here in Frankfurt. They've reported really a lot of upbeat sounding news. They say that business travel is starting to pick back up. They reported a record in their cargo division, which has seen a lot of demand because of the supply chain congestions. Ocean shipping is very congested right now, so they're benefiting in the cargo division. But they're also pretty optimistic about the next couple of months. They say that the reopening of U.S.-EU travel, which is starting on November 8th, should really boost demand. And they're saying that for next year, they're hoping to fly about 80% of their capacity. They've also gone a long way towards cutting costs. They've cut about 2.5 billion euros worth of costs and about 30,000 jobs. So that's also helping to boost their bottom line.
Also see third quarter numbers out for car maker BMW, providing some insight on the European auto industry. How are things looking?
For BMW, it was also a surprisingly good quarter. They, like all other automakers in the world right now, are struggling with supply chain problems, but they've managed to pull out record earnings and revenue in this quarter. So they did beat expectations, even though deliveries fell about 12%. And that's, of course, because they just don't have enough things like semiconductors and other raw materials to keep production going at the same pace. But they also have been able to raise prices, so that's really what's been benefiting them. That's why they haven't been hit so hard by the semiconductor shortages. So they've raised prices both for new cars and for resale cars, and that's really helping them. We've seen this from other automakers as well, especially in the luxury segment. So companies like Mercedes, Daimler here in Germany have also been able to raise prices and offset some of that pain from the semiconductor shortage.
All right, Chelsea Delaney live in Frankfurt there. Thank you so much, Chelsea. I'll talk to you tomorrow. All right, let's cross over now to the UK with Juliana Olayinka. Great to have you, Juliana. So back to COP26. We see Sunak has said he wants UK to be a net zero finance hub. And to that end, wants publicly listed companies to disclose their climate metrics. What are you hearing about this?
Yeah, good afternoon, Laddie. As you said, COP26 continues in Glasgow. It will end next week, Friday. Today, day 3, has all been about finance and financial institutions, and this has really been led by two gentlemen, one being the Chancellor of the Exchequer, Rishi Sunak, and the other being the former Bank of England Governor Mark Carney, who has really set out on this new initiative of making financial institutions across the world responsible for their carbon footprint. And in the UK, the Chancellor plans to do this by asking or demanding financial firms and institutions to detail how they plan to get to net zero by 2050. And they need to do this by 2023. This is going to be thoroughly scrutinised. So it's not about just making these ambitious pledges and not sticking to them. Once they have outlined these plans, they will be put through an expert panel who will scrutinise them and make sure that the plans are fit for purpose. Now, one of the issues that a lot of these activists have, and there are several of them, in fact, thousands who have descended upon Glasgow, led by Greta Thunberg, is that these plans are not mandatory yet. They haven't been put into law. So even though you have to outline the details, you don't exactly have to do them. I'm sure that will change over the next coming weeks. But some of the big announcements that have come out of COP this morning is apparently there's $123 trillion put aside, ready to go by financial institutions to make green investments. So it is going to get increasingly difficult for big firms to ask for money to build coal plants or, big oil drills without showing how they're going to do this sustainably. So it's seen as a really important day in COP26.
Right, I guess the world will be tracking execution of these pledges at this moment. Well, the latest survey of purchasing managers from the IHS market has found a sharp and accelerated rise in business activity at service firms during October, but firms seem to be struggling to hire.
They are, yeah. It's been a bumpy ride, Laddie, for Britain's economic recovery. Still on track to get ourselves out of the pandemic slump, but the second quarter wasn't so great. We've just had some forensic detailing of the beginning of the last quarter, the final quarter, the all-important quarter, with October's PMI data. We know that Britain is a service-based economy. It contributes about 80% to GDP. So the fact that October's service PMI numbers is good is a huge sigh of relief, I think, to the Chancellor, and especially Boris Johnson, the Prime Minister, who's currently chairing PMQs in the House of Commons. The numbers come in at 59.1, I believe, much higher than it was during the month of September, which was about 55.4. Anything above 50 does show growth, but it has been rocky. even though there has been a sharp increase. A lot of this increase, I believe, is down to the reopening of borders and the fact that more people are feeling comfortable going out and spending their buck. As you were saying, lots of companies that took part in the survey are still complaining about a shortage of staff. And this is a huge issue here in the UK, especially going into the all-important Christmas month, where lots of retailers are hoping to get their money back. And even amongst lots of these employers raising wages, they are still finding it difficult to get these specialised skills in. People are just not applying for these positions. Another big issue that we're seeing in the data release from the Purchasing Managers Index is the rising cost of energy. Wholesale energy prices still a major issue. I was speaking with Chimeze this morning on Business Morning about the fact that another 4 energy firms have gone out of business here in the UK, smaller firms, but still affecting over 2 million customers. Since the start of September, about 18 firms have gone out of business. And this is what we're seeing. So supply shortages, rising energy firms, labour shortages, still a big issue for the UK economy. But alas, the PMI service data for the month of October in services is still pretty impressive.
Right, that's a lot of shortages there. But how's the market looking at intraday?
Not great. The FTSE All Shares started out in the red, still there at intraday. As you were discussing with Chelsea and Frankfurt, all eyes are on the Federal Reserve. Will they not taper assets? What's going to happen with interest rates? And domestically, we've got our own conundrum coming up. This time tomorrow, I'll be able to let you know whether or not the Bank of England have risen interest rates for the first time in a couple of years. Currently, interest rates are at a record low of 0.1%, but with the rising levels of inflation way above the Bank of England's target of 2%, currently standing at 3.1%. Who knows? It's all to play for. Certainly, we're expecting an interest rate rise before the end of the year, but will it come tomorrow? We don't know, which seems to be the sentiment for investors in the square mile. The FTSE All Share is down 0.17%. The FTSE 100 is also down by 0.23%, and the FTSE 250 down by 0.7%. In the currencies market, the British pound is currently up against the US dollar by 0.07%, also up against the euro by 0.02%, but down against the Japanese yen at intraday by 0.05%, Laddie.
Yeah, I guess all eyes on the Fed meeting. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you.
All right, now let's look at what's happening in the U.S. U.S. stocks futures were muted in morning trading as investors awaited a decision from the Federal Reserve on its move to start withdrawing the support it has been providing. Dow Jones Industrial Average futures dipped 37 points. S&P 500 and NASDAQ 100 futures are both traded in mildly negative territory. Well, let's get more on yesterday's trading from our correspondent, Maria Bird.
The U.S. stock market had an autumn rally on Tuesday. As for the third straight session in a row, all 3 indexes had record closings. The S&P 500 closed 0.4% higher, the Dow Jones 0.4%, and the NASDAQ 0.3% higher. It is clear that investors are looking forward to a great fourth quarter, as the U.S. has shown great progress in November and December due to the holiday season. It is unclear whether or not the supply and demand issue will cause challenges for the future of the U.S. economy, but many are hopeful as companies like Pfizer are on its way to seeing record highs as a result of the vaccine being released for children.
That's Maria Bird there with yesterday's trading numbers. Well, shares in Asia Pacific were mixed on today as investors look ahead to the end of the U.S. Federal Reserve's 2-day meeting for clues on tapering. South Korea, the Kospi declined 1.25% to finish the trading day at 2,975 points. Shares of Kakao Pay surged in their debut as they more than doubled from their issue price of 90,000 Korean won. By Wednesday market close in South Korea, the stock had soared about 114% from its issue price. Elsewhere, mainland Chinese stocks closed lower, with the Shanghai Composite falling 0.2% to 3,498 points, while the Shenzhen Component declined fractionally to 14,367 points. Hong Kong's Hang Seng Index dipped about 0.5% as of its final hour of trading. The S&P ASX 200 in Australia climbed 0.93% to close at 7,392 points, while Taiwan's TAIEX advanced 0.33% the day to 17,122 points. And after the break, we'll bring you more stories from the African continent. Do stay with us. Welcome back now to our next conversation. Leaders of the world's biggest economies formally reached a deal to set a 15% tax on multinationals. And all the leaders at the Group 20 summit in Rome endorsed the new rules, including a global minimum tax that will end the damaging race to the bottom on corporate taxation. And we also have how this would find out how this would impact poorer countries and countries in Africa. We have joining us now, Tamsanka Zhu, business journalist, has joined us now from the UK. Great to have you on the program.
Yeah, it's good to have you, Ladi.
All right, tell us about this 15% tax on global profit. How do you see it working?
This is going to be a difficult one. So first, let's just get up to date with what the G20 agreed. These are the biggest, or the 20 biggest economies in the world. They decided that you need to stop this race to the bottom. In other words, if Nigeria was trying to attract foreign direct investment, let's say maybe Twitter or Facebook to come and set base in Nigeria, in Lagos, then if Ghana or Benin or any other country in the region also is trying to attract the same business, then they would lower their corporation tax and try to make the conditions for making a better profit more attractive. So they are simply saying that race needs to stop. There needs to be a 15% corporation tax across the board so that you don't have all these countries competing with, in particular, some of those jurisdictions that, you have called tax havens in the past, where people found it convenient to go and place or the registration of their companies or businesses there. So in the case of the EU, it was mainly countries like Ireland, the Republic of Ireland, where you would have maybe Google, based there in terms of their headquarters, but then the operations are in the rest of the European Union. And whatever profits they make in the EU, then they declare via, this office in Ireland, and then pay less tax that way. So this is part of a big move that they are trying, but it's only what it is. So in terms of how it's going to work, everyone needs to go back and try to convince their local politicians to vote for local legislation that will implement these things. So because signing up to that is one thing, even if the OECD has a convention that people can sign up to, getting it done, especially for Joe Biden's administration in America, is not necessarily going to be everything.
Right. So I guess right now, what do you think would be the potential limitations to this deal?
I think the potential limitations will be, I think the first is whether this is something that's going to be popular in the various countries across the world, especially when you are talking about, the need for more money to go into countries to try and, keep up with what has been promised at COP26. All that, you need a lot of money to do that. I mean, President Buhari was even talking about the need for help. So how do you then get that help? Is there no longer any incentive to attract that business? So, you need to think about something else. So I can foresee a lot of countries resisting this. But I think if you then look at, Africa in particular, a lot of African countries, I will say, you are neutralizing the race. Imagine if you were running a marathon and Kipchoge, or maybe even Usain Bolt, if it was 100 meters, you get to 50 meters and then the race is neutralized. What is the advantage in doing that? So I can foresee that this is going to be very, very difficult when it comes to explaining to these countries and business people and those that want to attract foreign direct investment, what this really means in exercise. But also just the other thing, Ladi, it's going to be complicated, especially in America, because the promise by Europe, remember they were taxing, there was this digital tax that France and others were talking about. So what they are simply saying is there's a promise that the American companies will be treated fairly if this is signed. But I don't not agree to that.
Okay. Well, if the deal actually pulls through, what impact can we expect this to have on, Africa and poorer countries?
My apologies, I missed you a bit there. Your audio.
Yeah, yes. If the deal actually pulls through, what impact can we expect on, Africa and, poorer countries? Briefly, though.
I'm finding it difficult to hear you, but let me just let me just say you're asking about how the whole thing is likely to pan out in terms of the implications, and let me just explain from an African point of view in the way that the business people that I'm talking to are relating. You have to realize that for a long time, Africa in particular has been looking at how you can develop and catch up with the rest of the world. Most of the governments have been bringing in experts. They've been bringing in ministers, especially in economic development and finance. Their budgets have been such that you can try to balance, move away from budget support that you get from the West and actually generate income from within. There is the youth dividends. Most countries are looking at 1.3 billion people in Africa, the majority of whom are very young. They are a massive, massive market for most of those Western countries. So if you are thinking about the future with respect to this tax, if you're going to be limiting the advantages of attracting investment into Africa, how long will it actually take the African countries or the young people, the tech hubs, to actually generate capacity to compete with Google, with Facebook, with Amazon, all these other digital massive companies that are available in the world to compete against? So this is going to be very difficult. Africa will be seen as a massive market because you are moving everything online, from media to processing to almost everything. You are looking at a massive market from Africa, because everything is different. They are protected. Chinese are not going to allow you. The Arab world are not going to allow the American companies to go there. So the market is Africa. So unless Africa is allowed to catch up and attract this investment at 5% corporation tax rather than 15%, it might be difficult going forward.
All right, Tamsaka. Thank you so much. We'll be tracking this deal to see how it pulls through. Thank you so much for joining us on the program. Tamsaka Zhu is a business journalist right there in the UK. Thank you so much.
Okay.
All right, now the U.S. has suspended duty-free access to Ethiopian export because of a year-long civil war that's spawned a humanitarian crisis in the Horn of Africa nation. Ethiopia is not in compliance with the eligibility requirements of the African Growth and Opportunity Act because of gross violations of internationally recognized human rights. However, according to a U.S. official, the determination can be reversed if the government addresses human rights and humanitarian and political crisis by January 1st. And Ghana seeks to boost domestic revenue with a digitized tax system that improves compliance. West African nation's revenue fell short of target by 12% in the first 7 months of the year and raises concerns about the country's ability to finance its debt. Ghana has a major challenge in domestic revenue mobilization with a tax-to-GDP ratio at 14.3%, compared with 27% for peer countries such as South Africa and 34% in advanced economies. Has led the implementation of a national ID card, which serves as a tax identification number and has increased the taxable adult population to 86% from a low of 4% in early 2017. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.